morning, welcome to Ainsley News. It's Tuesday the 19th of January. Crypto Tuesday, we're talking buying the dip. Recently, Bitcoin experienced a much expected pullback. Bitcoin, over its short history, has established a trademark dip of 20 to 30% during bull markets. This price usually precedes further extraordinary gains. Will it happen again? Last week, over a 2-day period, Bitcoin dropped 28% from its high of almost $54,000 down to 39,500. This characteristic move echoes the many times it has occurred during Bitcoin bull markets in the past. Here's a chart here showing an example of all of those pullbacks through 2016 and 17. And this here during the current bull market, shown here in this chart. Seasoned crypto investors are all too familiar with crypto's signature dip. Often extremely violent and short-lived, these dips are the perfect time for investors to gain exposure during a bull market. Interestingly though, based on history, on-chain data points to the recent pullback not being the top, but rather a normal dip of a longer-term bull market. While volatile, this often means that further gains are available. Additionally, Bitcoin tends not to take very long to set new higher highs and continue its trend. And after 30% drops, it's often marked by 100% plus gains. Check out this chart here showing all the times that's happened. It isn't unreasonable to have price targets above $100,000 for BTC. Bitcoin cycles are epic, often finding thousands of percent during each bull market. The current bull market has only found 1,213%, which on its own sounds incredible, but it pales in comparison to the 3-year bull market of 2014 to 17. Sure, those sorts of gains will be a lot harder to find going forward, but it goes to show that there are still a lot more gains on the table. And this time, institutions with deep pockets are flowing into the market and on-ramps are more accessible to the public. Check out this chart here for Bitcoin cycles. On a more short-term basis, BTC has had 4 double-digit percentage losses since first encountering resistance from the 2017 all-time high level in November. Progression has created higher highs and higher lows after each correction. Here's a chart here showing those bottom and correction percentage points. If the trend continues, last week's bottom could be the local bottom before further upside. Since December last year, the number of Bitcoin addresses with more than 1,000 BTC has increased by 150. We have been here before. Dizzying highs and lows are not a new phenomenon for Bitcoin. However, the cryptocurrency is finally gaining institutional support, which eluded it for a long time. The pandemic certainly helped. During the widespread lockdowns, online commerce and payments ballooned, increasing interest in digital currencies exponentially. Bitcoin was always volatile, but the past year has shown that every asset class can become wobbly in an uncertain environment. It was always regarded as an interesting store of value due to the ultimate ceiling of 21 million of them and the difficulties in mining it. But its wider acceptance in bringing a sense of credibility and stability that was hitherto missing. Here's the addresses chart here showing you how many people are averagely holding there. 109 people have 10,000 BTC or above. Imagine being one of those people. The above comparison adds fuel to the narrative that institutions are buying BTC at the expense of retail investors and traders. Furthermore, long-term Bitcoin tops, for example 2013 and 17, were marked by retail euphoria. Currently, what the market is witnessing is precisely the opposite. So while this big drop in Bitcoin's price might be unpleasant for newcomers, it should serve as a reminder of just how unpredictable it can be. That's why if you're considering investment, it should surely be for the long run. Despite one short-term blip on what looks like Bitcoin's meteoric long-term rise, many investors and analysts are still considering cryptocurrency a buy. This makes the current dip a great chance to load up on more Bitcoin investments or to get your foot in the door if you haven't already. The trouble is knowing how much to buy. While dollar cost averaging can help, it's impossible to know if Bitcoin will continue its rebound quickly or sell off further, offering an even bigger discount. This is all the more reason to make a long-term investment. Of course, if you want to buy it for the lowest price possible, but even if you overpay slightly, if you hold it for years and Bitcoin appreciates as many expect it to, the price you bought it at will be the last thing on your mind. Well, that's news for today. I hope you've enjoyed that little bit of education about BTC this fine Tuesday. Remember, if you are after cryptocurrencies, jump over to ainsleywealth.com.au. You can purchase BTC and a range of other cryptocurrencies through that website. If you're still after the physical stuff, anzbullion.com.au. We've currently got 1 kilo silver kookaburras available, and there's not many of them, so if you are into silver and coins, be sure to jump in. And goldsilverstandard.com. That's a cryptocurrency built and backed by real gold and silver, built by Ainsley, of course, and stored at Reserve Vault in Brisbane. Enjoy your Tuesday. We'll catch you tomorrow for more news.